Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Austin, Texas at Consensus by CoinDesk. Joining me for this segment, we have Alex Miller, who's the CEO of Hiro, and we're going to discuss Bitcoin as the base layer for Web3. Alex, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me. Great to meet you.
Let's talk about that, Bitcoin as the base layer for Web3. How does this all fit into the ecosystem?
Sure. So look, most people are familiar with like Web3 development, and they think of things like Ethereum or Solana, whatever, a lot of these other ones. But the approach we've taken and that we're thinking about is like, hey, Bitcoin is the original cryptocurrency, right? It's the longest around, it's the most trusted, it's the most stable. It's a really solid base if you are trying to build a trusted network for the next several decades. And so the Stacks project, which is the ecosystem in which my company Hiro works in, is all about how do we bring all of that fully expressive smart contract functionality, let people build things like DeFi and NFTs and any kind of apps they think of on Bitcoin, secured by Bitcoin, and just available to everyone.
That's interesting because when you think of Bitcoin, it's more of the store of value is the first thing that comes to mind, but you don't think about it as the underlying technology for these projects. So that's a newer concept, so I learned something new today.
There you go.
I want to ask you about Bitcoin DApps.
Yeah.
You see DApps all over, right across from us, we have this massive activation.
Oh yeah.
What are Bitcoin DApps and why would they be the key components for Web3 infrastructure?
Sure. So Bitcoin apps can ultimately look and act the same as all of the other crypto or Web3 applications that you're used to seeing. I think the biggest difference in them is going to be that if you're building on top of Bitcoin, it's easier to activate that hundreds and hundreds of billions of dollars in asset value that's on Bitcoin. I think it's easier to appeal to folks who maybe aren't part of the Web3 ecosystem yet, right? Like Web3 at the end of the day has very small penetration in the grand scheme of things, right? You see a huge amount of press coverage maybe and money in it, but ultimately you're talking 1 or 2% actual penetration. And if we're actually going to build something that is the next generation internet, right? And in the Stacks ecosystem and at Hiro, that is what we're thinking about. We're thinking about what the next generation of a user-owned internet looks like. Well, you got to do better than 2 or 2% penetration.
Right.
And so I think starting with something that has better name ID, that is more trusted, that has proven itself over the last decade and a half that it's going to be around, it's a much more solid base to start from on top of Bitcoin than on top of a chain that's only been around 6 or 12 months or something.
So what would be some of the use cases?
Sure. So Bitcoin lending and just kind of DeFi, Bitcoin lending and swaps on it. You've already got Bitcoin identity, right? So the Bitcoin name system, if you go to if you take alex.btc, like that's a way that I am uniquely identified through it and can log into different apps and have a unified set of identity and data across the board on it. You've got hundreds of thousands of NFTs and art built on it, things like CrashPunks. And then you have people extending NFTs, right? NFTs we know is how they're associated with like art and culture so far, but they're actually a really useful tool for uniquely identifying anything. I know someone who's working on real estate programs, right? And how they can tokenize real estate assets using Bitcoin-based NFTs. And then of course gaming. I think the first round of gaming we saw in crypto was like, kind of, for lack of a better term, an exploitative approach to gaming. We're seeing people now come back and say, okay, let's take a round 2 at this and actually look at how we can build something that does provide that ownership and a tighter connection between the game studios and the players instead of just like a way to make a little bit more money out of them off the top.
And that's really cool with it because now you're talking about interoperability between the different gaming platforms, and I think it's so cool. Like if you're part of the content creator economy, the opportunities never existed like they do today.
Nope.
But even user-based games, technically the game has no end because the users can keep creating new worlds or whatever you want to call it.
And in-game economies have existed for years. I mean, when I was in college years ago, I had a college roommate who sold his World of Warcraft character for like $4,000. But he had to do it like through eBay, through like secret black market stuff, and you had to be really careful because like their algorithms didn't want you doing that and things. But I mean, in-game economies have existed for almost as long as games existed, period. The potential for Web3 and for integrating crypto into them is how you can actually merge that in-game and out-game economy and actually make it part of the core gameplay, and to your point, extend it and make it basically infinitely expandable and infinitely interesting for the players while connecting them tighter to the game studios themselves, which I think is a really big opportunity for figuring out the next generation of games on an ongoing basis.
Yeah, I think that is certainly one of the more exciting parts of everything that we're talking about today. Alex, thank you so much for joining us on
Yeah,
Trade Talks.
absolutely.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.